welcome. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets. To my left is Amit Ranjan and Suyash Maheshwari. Suyash, markets opening at an all-time high this morning.
Great morning for the Indian markets, Shweta. Indian markets were able to climb all walls of worry and the muted trend in global equities, and both Sensex and Nifty opened in today's session at record high levels. Now at 10 a.m. this morning, Sensex is trading above the 67,700 mark. Now Sensex has touched record highs for the first time since July 20, whereas we have seen Nifty hitting record highs on a daily basis. Yesterday also we saw some buying action where Nifty was able to scale another peak. Now today Nifty is surpassed 20,150 levels. Now in today's session we are seeing that all sectors have participated.
Okay.
PSU banks, realty, Pharma index, they have been the top performing sectors. Also, the mid cap and the small cap indices are participating. There was a lot of worry about the mid cap and the small cap space because of a big correction that we saw day before yesterday, where both indices fell about 3 to 4%. Both indices in today's morning trade are up about 1%, so actually outperforming the headliners.
All right, and a big momentum there as far as Sensex Nifty is concerned. Sensex also at an all-time high since 2020. Joining us on the bulletin is Ambareesh Baliga, who's an independent markets commentator. Mr. Baliga, thanks very much for taking time out. What's leading to this rally and buying momentum?
See, 20,000 on the Nifty was a milestone which was awaited for long. I mean, we have seen close to those levels twice or thrice, and then the markets are corrected. So naturally, once it's crossed, you'll see a lot of those fence sitters jumping in. And because of which, I think clearly this momentum should continue for a while. And I'll not be surprised if we see markets closer to about 21,000 levels decently soon. But then, if you're talking of valuations and the comfort, anyway, I was not comfortable with the markets at 19,500 levels, so I won't be comfortable at these levels too. But then I think it's a good market for traders. I mean, especially for the bulls, because whatever you buy now, I mean, most of the stocks, especially in the mid cap and the small caps, keep moving up. But this may not be the right time for an investment because what we saw day before yesterday, as far as the mid cap and small caps are concerned, I mean, the way we saw that cut, I think that's very much possible. So one needs to be a bit careful as far as that is concerned. So even traders, I would say, should keep a very clear stop loss in mind, because if you don't keep a stop loss, you could get caught on the wrong foot.
Ambareesh, talking about traders needing to be cautious, what are some of the levels that they would need to track when it comes to Nifty?
See, I think as far as Nifty is concerned, clearly this 20,000 is a very important level. If that is broken, sentiment gets broken to a certain extent. But then I think 19,500 and 19,600 levels is a very, very good support. If that is broken, then I think you'll see a very sharp correction. So I think these two levels have to be kept in mind by traders. And as of now, it seems that we could see another 800 to 900 point move from here, possibly over the next couple of weeks.
Now, Ambareesh, also talking about investors, specifically new investors, what would be your advice for new investors who are seeing Nifty and Sensex hitting record highs, Nifty especially hitting record highs on a daily basis? What would be your advice at current juncture? Should they enter the markets at now or wait for some profit taking to take place?
I would say one should wait for some profit taking before you start entering the markets, because I mean, again, if you have that FOMO, I mean, the feeling of missing out. So in that case, I would say possibly invest a bit at this point of time, because I mean, for the portfolios and the clients I advise, in fact, we are close to about 40% in cash, because we had a very good run up from the March-April levels where we are fully invested. So from those levels, in fact, we have booked a lot of profits, sitting on cash between 30 to 40%. So someone coming in new at this point of time, I would say that if you can manage to hold back, then possibly just sit on cash for a while longer. If you can't, then possibly invest 20-25% of your cash at this point of time. But be prepared to see losses and should not really panic, because in case the market comes down, then you have the balance 75% to invest.
All right, and FIIs continue to be net seller as of yesterday as well, Mr. Baliga. Do you see the trend reversing anytime soon?
No, I don't see that trend reversing because if you look at the hawkish sort of thing from Fed, I mean clearly we expect one more rate hike. So I really don't see any reason as to why the FIs would be investing more at this point of time. In fact, they would look at booking out to a certain extent because if you remember about 6 months back, they were net investors. And surely they are sitting on decent amount of profits. So I think it makes sense for them to book out to a certain extent and take the profits back home. Whereas we are clearly seeing that the markets are being supported by the domestic mutual funds because of the sort of record SIP flows, and the mutual funds can't really sit on too much of cash. And at the same time, I mean, we have seen the retail and the HNI investors. I mean, they have made good amount of money in the last couple of months. So I think the confidence level is high. So people are putting in more cash at this point of time. But then one should always remember that always a liquidity-driven rally. I mean, it creates a bubble at some point of time.
All right, and before we go to global cues, I want to also specifically talk about US inflation maybe in just a while from now. But small cap, mid cap, once again rallying, Suyash.
Yeah, that's very strange actually, because in day before yesterday's session, a lot of analysts after the 3 to 4% fall in both indices were expecting and saying that the valuation at current point in time is stretched and maybe it's time to shift the focus from the broader markets to the large cap. But then again, after day before yesterday's fall, we have seen buying momentum again pick up in the Nifty mid cap and the small cap space, whereas both indices are now outperforming the large caps.
Right, both indices outperforming large caps. What's your view on small cap, mid cap, Ambareesh? Should one continue to be invested at this point? Do you think the valuations are stretched?
Because we have seen quite a few of them becoming actually multi-baggers in the last couple of months. And I think it's best that one at least takes the capital out. If you're not selling the whole thing, at least take your capital out, be safe. Just play with your profits. I think that's the sort of advice which I'm giving to most of my clients. I'll just give you an example. A company like IRFC, Indian Railway Finance Corporation. I mean, like the IPO had come at 26 rupees. The stock was languishing at 1920 levels for a long time. I mean, at those levels, I had given a buy. And my target price was about 36. And the best possible, I mean, even if I stretch the valuation, it would come to 42. And today, the same stock is quoting at 80. We have seen the stock going up to 93. I mean, this is madness because I mean, like their business model has not changed. Nothing has changed in the last 6 months, but the stock has gone up nearly 3x, 3 to 3.5x. So, what justifies this? I mean, other than the sentiment booster or whatever you call that, maybe you can call that euphoria. But then it's quite difficult to justify this fundamentally. So clearly, when your expectation was 42, max expectation was 42 as quoting at 80 plus, I think it's very prudent to book out to a large extent.
So, as you are keeping it with mid caps and small caps only, as you said, a lot of the stocks and sectors, especially if you look at defense, railway, PSUs, have turned multi-baggers this year. Are there any pockets of value in the mid caps and space, in the mid cap and the small cap space that you're looking at this point in time?
So, see, I mean, there is some value I see still in pharma. I mean, that has been a bit of an underperformer in the last 2 years. We have seen decent movement in the last 6 months, but still I see value as far as pharma is concerned. Specialty chemicals has also just about started moving, and that's one space where there's still a decent amount of value.
So, what about the hospital sector? We saw that a lot of these hospital companies are investing in raising their capacity. Apollo Hospitals yesterday, day before yesterday, we saw a news that they are going to get another 3,000 beds in their monitoring program, whereas they currently have about 1,000 beds. So, what is your take on the hospital segment, sir?
No, on the hospital segments, I'm quite positive, no doubt. But then, I mean, we are having a lot of, I mean, these hospital groups coming out with their IPOs, which clearly means that all of them will be adding a lot of capacity. And sooner or later, I think we will see a decent amount of capacity built up, which actually means that margins could be under pressure to a certain extent. I mean, you see, if you look at the corporate hospital, this is actually meant for a certain set of the population. It is not meant for the, overall population. It is meant for only the richer class. So there, I suppose, if you look at the demand supply, I think that could get satiated at some point of time. If I'm not wrong, maybe in the next 3 years, you'll actually see the capacity shooting up quite a lot, which actually would mean slightly lower margins. So I will not really go out and buy hospitals at this point of time, but then the stocks which I have, possibly I'll hold on.
All right, and since we continue to talk about sectors and stocks specifically, I know you're very excited and pumped up about Bombay dying, Suyash.
Actually, I think Bombay Dang is a stock of the day. The stock was up about 7% yesterday, and it was up about 20% in the morning trade.
What's
has
the big
corrected.
trigger?
Yeah, talking about the trigger. Now, Bombay Dang yesterday entered a deal to sell about 20. It's a land pocket of about 22 acres to Sumitomo Group for about 5,200 crore, which will be among one of the biggest land deals in Mumbai. Now, on completion, according to Nusli Wadia, the company will make a pre-tax profit of about 4,300 crores, and the company will use this money to to reduce their debt burden. Also, there was a large block deal today, Shweta, earlier this morning, where 35 lakh shares, which constitutes about 1.7% of the entire equity capital, changed hands at a deal of about 56.8 crore rupees. So, sir, what's your outlook on Bombay Dyeing? Maybe too hot to enter at this point?
See, if you look at the Bombay Dyeing market cap, it's about 3,300 crores, and here we're talking of a 4,300 crore net inflow. But again, the big question is, what will the shareholders get out of that? If there's going to be a buyback or if there's going to be a large dividend payout to the shareholders, yes, it makes a lot of sense. But then looking at the track record, I doubt, because quite a lot of will be used to pay off the debt. At the same time, we should remember that another group company, GoAir, is in deep trouble. So possibly some amount of funds will actually go in to sort out that mess. So I doubt whether the shareholders of Bombay Dyeing really will benefit a lot out of it. But then because of this news, there's a sentimental booster because of which we've seen the stock performing. I would possibly look at booking out to a certain extent if we see the stock going up to levels of closer to 200.
So, what's your long-term outlook on the stock? As you said, short-term, we can expect you would advise to book some profits. But what about the long-term prospects of the company?
See, the valuable asset was this property, and once this is sold, I really don't see, a major sort of a booster for the company as such. I think it'll be a normal operation. So I really, I'll not really, hold on to the stock beyond a certain level.
All right, and some other stocks that are in focus this morning, RIL, Adani Group.
Yes, Shweta. So RIL, the retail arm of Reliance Industries, Reliance Retail, is now in talks to raise another $1.5 billion from the wealth fund of Singapore, Abu Dhabi, and Saudi Arabia. Now remember, back earlier in September, it raised about about $100 billion at a valuation of about $100 billion. It raised funds from QIA, and then we saw a $250 million influx from KKR. So the plan is, at least from what I'm reading, is to raise about $3.5 billion in the month of September at a valuation of about $100 billion.
And a lot of news, in fact, flowing in, by the way, of what's happening with Reliance's retail business. A lot of value addition and the change in valuation for that matter, Ambareesh. It appears that Reliance Retail seemed to be upping its game day after day.
Absolutely. The way valuations have been moving up for Reliance Retail and the way they have been raising funds, I think there'll be actual, unlocking for the shareholders once we see a clear demerger, like what had happened for Geo Financial. I think that's what is keenly awaited. And along with that, possibly you'll have the Geo Telecom also getting demerged. I think these are the two things which will actually create a lot of value for the shareholders. And that's, I think, one of the reasons why I should just, hold on to Reliance from a longer term perspective.
All right, and Adani Enterprises is also in focus today.
Yes, both Adani Enterprises and Ambuja Cements are in focus because the Adani Group is looking to refinance, the debt taken to fund the purchase of Ambuja Cements from some of the largest banks in Asia, which will be the biggest syndicate loan deal in Asia. Now, Adani Group is in talks to refinance about $3.5 billion of loan which it took for the purchase of Ambuja Cement. So both the stocks were in focus today. I think they are up marginally in today's trade, largely underperforming the entire market, Shweta.
All right, and Ambareesh, I know that I have to let you go very, very shortly. But Adani Group's and then the Adani Group bouquet of stocks that we continue to track, there's been a concerted attempt made by Adani Group to repay as much of its loan as possible,
Absolutely.
especially on the back of Hindenburg. There's been an attempt made there by the government to by the group to let go of its debt, to clear its books,
Right.
and that continues to be the case as of today.
Absolutely, I think that effort is on, and frankly, I really don't see anything negative coming out of all the probes which are on as of now by the regulators. So, if you're looking at the various group stocks, I mean, I would be positive on two of them. In fact, like Adani Ports is one where I'm quite positive on, looking at the sort of capacity which they have. Close to about 26% of India's capacity is held by Adani Ports. And looking at the way the revenues should shoot up for, I mean, the segment overall, the port segment overall, if you're talking the next 4 to 5 years, I mean, I would be clearly be bullish on Adani Ports. The other one is Adani Wilmar, where I believe that this is an odd man out as far as the sector is concerned, and looking at the overall business of Adani Group. So it's very much possible that this company may be on the block, and you never know whether it's Wilmar who will buy it off, or any of the other larger groups in India. So I think I mean that's when you'll see some value unlocking for this stock to happen, and we have seen a decent correction in the past couple of weeks. So at the current levels, I would surely recommend a stock like Adani Wilmar.
Okay, Adani Wilmar and Adani Ports continue to be focus areas for Ambareesh Baliga there.